I'm gonna give you the biggest secrets on how to increase your credit score fast. The number one question that people always ask me is, Mike, how can I increase my credit score fast? So in today's episode, I'm going to cover one of the biggest topics that is just that, increasing your credit score the fastest way possible. So in today's episode, we're going to focus on the most effective, most powerful way to increase your credit score within a 7-day window. That's right, I said 7 days. Because if you follow this recipe, as I've taught thousands of my clients, you're going to be successful, and I'm going to teach you how to take control of your credit score, because people think that the credit reporting agencies, the credit card companies, all of your lending people that you've done actually loans with are controlling your credit score. No, you are the person that controls your credit score, and I'm going to show you exactly how to take control of it. And I'm also going to show you the number one thing that kills credit scores and all the tips and tricks that you need to know along the way so you can be successful and watch your credit score grow consistently. Now, before we get into the major super sauce, I want to give you a huge tip. There's a huge trend that I see going on here lately in credit repair, and this is a huge problem. People think that credit repair is the answer when you are carrying credit card debt. No, it is not the answer. You may have some negative items on your credit report. You may have some collections, charge-offs, some late payments, but if you have credit card debt, do not do credit repair. Now, of course, all these bootleg credit repair companies out there are going to look at your credit report and say, oh yeah, man, we can help you work on this. Let's get to work. Let's fix your credit. Yeah, we'll get you back on track. But what they're not telling you is you can be more effective by taking that money that you were planning on spending on credit repair and putting it towards your debt. So again, we want to focus on attacking our credit card debt, because if you attack your credit card debt first, then everything else will fall in line. Because if you're carrying credit card debt, you are not financially ready to actually start working on your credit. And people think that, oh man, if I get my credit fixed, then I'll go buy a car, a house, I'll get better credit cards. No, you're not mentally there yet. So if you focus on your credit card debt first, now you're going to be out of debt. You'll have a huge burden lifted off your shoulders, and now you can truly focus on your credit. That's how you should attack your credit score. I just felt like I had to tell you that real quick before we get into this. Now let's get into the sauce. In order to take control of your credit score and help it increase at the highest level possible, you really truly need to understand the 5 factors of credit and how they affect you, because this is the part that everyone misses. People stop talking about the basics of credit. They want you to jump into these massive credit cards, not understanding the basics of credit. So we're going to break down the 3 major factors that I want you to focus on and how you can achieve that successfully, because every single category that makes up your credit score has a certain amount of points. So let's break it down real quick. So there are 5 categories that break down your score, and each one of these categories gives you an allotted amount of total points, and nobody's probably ever explained that to you. So let's break that down. Payment history is going to get you 192 points. You want to have no late payments in the most recent 24 months. Credit utilization, that gives you 165 points, and you can always maintain that and keep a high credit score by maintaining below 9% utilization. Now remember, utilization is the balances that are reported from your credit card. That's all it is. If you can control these 2 categories, you can control 65% of your credit score, and then everything else will fall in line. So credit age will get you 82.5 points, credit mix will get you 55 points, and then inquiries will get you 55 more points. You see the difference here? Let's focus on controlling the first 2 big categories that make up 65% of your credit score. If you can control those, you have taken 100% control of your credit score. You want to make sure, like I said a second ago, never ever get a late payment. This is the most important thing that people think it's not a big deal. It's not a big deal. It's a late payment. You know, it'll stop hurting my credit score in like 30 days. No, a late payment has the most impact in the most recent 24 months and hurts you the most for 48 months. And it doesn't go away for 6 years. That's high impact. So make sure you never get a late payment. And if you did, try to focus on reversing it. And then keeping your utilization always below 9%. And we'll also cover the sweet spots so you can really truly get an answer of, should I carry a balance or should I not carry a balance on my credit cards? In order to take full control of your actual utilization, again, remember the balances that are reported on your credit card, you need to truly understand how to read a credit card statement and how to pay your credit card properly. First, I'm going to show you a Capital One credit card statement, and then after that, I'm going to show you a Discover credit card statement. I want you to see the differences, but understanding that every single credit card statement is basically the same. You're just looking for specific dates, and everything else is just basically useless to you. But a very interesting thing that I want you to pay attention to, look at the minimum payment due on a $286 balance is $25. That minimum payment due is a trap. It is literally created to make you pay interest. Well, you know, I could just pay 25 bucks this month and then pay the rest back next month. And before you know it, you're in a vicious cycle that you never get out of. Because if you scroll right to the very bottom of it where it says, if you make a minimum payment warning, if you make only the minimum payment each month, you will pay more in interest and it will take you longer to pay off your balance. For example, it will take you 16 months to pay off a balance of $286 if you only make the minimum payment. And it will wind up costing you $351. So on top of it taking forever, now you're paying more for that money, which is completely unnecessary. We are going to focus on paying off your credit card in full every single month and how to do it properly. Now, on every credit card statement, you're going to have 3 dates. Your due date, which what we talked about, is the 16th of every month. And then your opening and closing date, which is right there where the red arrows are pointing at you, if I could say that right. January 23rd is the opening date and February 20th is the closing date. We want to focus on the closing date, or otherwise known as the ending date. But pay attention to something interesting. Your due date is on the 16th and then your closing date is on the 20th. That's a 4-day window. It's pretty crazy, but it varies from every credit card company. But there's a 4-day window for you to pay off your full balance. And it doesn't tell you anywhere on that. It doesn't say, hey, pay off your full balance every single month. It's going to help you. No, it doesn't say that. Instead, it's going to put in big bold letters, this is your minimum payment due. It's not giving you a choice. And of course, not everyone can pay off their credit card in full every month, but you want to really focus on that and only using your credit card for your everyday expenses, not for things you don't need in life. So if your credit card statement closing date is the 20th, we want to pay off our credit card 2 days before that in full, because it's going to take 1 to 2 days for your actual payment to clear. Now, once the 20th hits, then we stop using the credit card for up to a maximum of 7 days, because the credit card company has 3 to 7 days to report your balance to the credit reporting agency. And if you use your card after you've actually paid it off on the due date, and then you actually use the card after your statement closing date, well, now you just put a new actual balance on your credit score, and now you're going to report a balance, causing your credit score to drop, because the higher the balances that report on your credit reports, the more your score is going to drop, because credit utilization, the balances reported, make up 30% of your credit score, as we covered earlier. Now let's look at the Discover credit card statement. Now, as you can see, the due date is the actual 20th of every month, so 3/20, and then the statement closing date is the 25th. Now, again, here's another 5-day window, but once your credit card statement closes, focus on that closing date. Pay it off in full 2 days before, make a 7-day window, don't use the credit card for those 7 days, and then now you have truly controlled your credit score, because you fully understand that if you pay off your credit card in full by this actual statement closing date, and then you report a 0 balance, you're going to push your score to the highest peak possible. Now, of course, you've heard the whole theory of you need to make sure that you carry a balance, because if you don't carry a balance, it's going to show that you're not actually using your credit card, and the bank needs to see that you're using your credit card. That's 100% false. Activity on a credit card does not make up any of your credit score points whatsoever. And we just covered that, right? The 5 factors of credit are payment history, credit utilization, credit age, credit mix, and inquiries. Nowhere on there does it say credit card activity or activity. No, it doesn't even exist. Now, yes, you need to make sure that you keep your credit card active, making sure that you use it at least once every 60 days or sometimes once every 90 days. Because if you don't use your credit card, guess what? The credit card company will close it. But understanding this does not actually affect your credit score. That's not what makes up your credit score. What makes up your credit score is utilization utilization, the balances that are reporting. So focus on that and not card activity. Two totally separate things that don't make any sense from all these weirdos out there that are making up these crazy lies. And also, don't you worry your little heart. I brought you proof so you can see exactly how different levels of utilization affect your credit score. Now let's put the FICO chart up on the screen. Now this is directly from FICO, the only credit score that matters. More than 90% of actual lenders or credit card companies or banks use a FICO scoring algorithm. Nothing else matters. So pay attention to the actual little chart with the little red box. That is your outstanding debt, the balances that are reporting. If you carry 0% utilization, it's going to get you 55 points. If you carry 1 to 6% utilization, it's going to get you 65 points. That's the maximum amount it can get you. It is only a 10-point difference. Nothing else more or nothing else less. Well, hold on. Actually, you could potentially get up to 10 extra points. Look at the little asterisk right next to it. The little asterisk represents minus the actual points you have already received. Now, you may have already gotten 1 point, 3 points, 5 points, 6 points, or you may not get any more points because you already got the full 10. Everyone's going to be different based on their credit profile. So assuming that you're going to get a full 10 is just an assumption because, again, it's minus the actual points that you have already received. So it's not going to make or break your credit score. Yes, it is a 10-point difference, but is that 10 points worth you actually paying interest on credit cards? I mean, that's just silly, isn't it? Why would you want to give the banks free money when you could just pay off your credit card in full? I live and die by this method of paying off my credit cards in full every single month because I'm not giving the banks any free money. I don't give a damn what any financial analyst tells me that has no idea what he's talking about a FICO score. But I also want you to pay attention to when your actual balances increase. When you go from 7 to 19% utilization, you're going to lose up to 15 points. You're going to 50 points. When you carry 20 to 49% utilization, you're going to only get 45 points. That's a 20-point drop. So when people say, oh, it's not a big deal, you can carry up to 30% utilization. No, it's a really big deal because you're going to lose a lot of points. Staying below the 9% utilization mark is always going to keep you in the safe spot. 0 to 6% is always going to be the best, but the number one spot, in my opinion, is always 0% because we don't owe anybody any money and we don't pay any interest. And the biggest problem that we see when people start to actually see their credit scores rise, they're like, oh my God, I'm at a 680, I'm at a 690, I'm at a 700. Then you start to get credit card offers in the mail. You start to get credit card offers in email. You start to get credit card offers everywhere. You start to apply for credit cards. Now you're getting new credit cards. No, stop. Stop applying for credit cards. Build with what you have. You only need 1 to 5 credit cards at max to be successful with credit. You don't have to have a lot of credit cards. The majority of people that have high credit scores that are between 800 to 850 only have 1 to 3 credit cards, an auto loan, maybe some previously paid auto loans, and then a mortgage, and that's it. Having a lot of credit cards is not necessary and does not mean that you're going to have a higher credit score. That is absolutely false because every time you add a new credit card to your credit profile, you're reducing the average age of credit. We need to make sure that our credit score continues to grow. So you're going to water it and let it grow. Water it and let it grow. It's just that simple. And it's honestly one of the biggest pet peeves when I see somebody that's in the Creditrepair program and then they start applying for credit. The moment they start getting a higher credit score, and I'm like, what are you doing? You're literally going to destroy all your hard work. Stop applying for credit, sit tight, and be the pickiest person ever when you're going to get a new credit card because now it matters. Every time that you add something to your credit profile, it needs to make a difference. It needs to fit your lifestyle, not my lifestyle, but your lifestyle. And you're going to have to understand that you're going to commit to this credit card for the rest of your life. Now, let's say you made the wrong decision and you got a bunch of crappy credit cards. Now you want to close them. Well, guess what? This is where that decision goes wrong because even if you close a credit card that you don't like, it's going to stay on your credit report for up to 10 years. And when you close it, it's going to rip away that age of credit, now dropping your average age of credit. And then you close the account. So now you're going to have 2 negative things that just happened to your credit report, causing your credit score to drop. we want to focus on growing our age of credit and being really picky and not just taking any credit card out there. Making sure, again, like I said earlier, it makes sense for your lifestyle. Now, I'm going to leave you with a final tip that also helps you increase your credit score, but understanding this is a short-term fix. It's not a long-term fix. Adding an authorized user account to your credit profile can potentially help you, but everyone's credit profile is different. But understanding that the banking institutions are working on figuring out what authorized user accounts are actually affecting your credit score and how, because they don't want to give you any money if they see you've got a bunch of authorized user accounts, because that increases their risk. So you have to understand, unless you're married or this is a short-term fix, it's not going to be long-term. Now, let's say you decide you want to add a bunch of authorized user accounts to your credit profile. People get into Creditrepair and they say, hey, Mike, should I get a bunch of authorized user accounts, add them to my credit profile to boost my credit score? And I say, no, don't waste your money. Because if you pay for an authorized user account from some company, it's not guaranteed that it's actually going to report to your credit reports. And that's a problem. And people say, oh, they just scam me. No, they didn't scam you. Credit reporting with authorized user accounts can be a nightmare. Sometimes it works and sometimes it doesn't. That's just the cold hard facts. And that's why it's better to do it with a family member, because if you do it with a family member and it doesn't work, it doesn't cost you anything. And also the negative to actually paying for this, you're paying for it for 30 days, 60 days, or 90 days. So you're having to pay for it every single month. You're just burning money for no reason when you can look for a close friend or a family member and get them on the same page. And if you do get them, they don't have to give you the actual credit card. You just tell them, listen, I'm just seeing if you can help me boost my credit score. I'm trying to achieve the goal temporarily. Once I'm done, you just pull me off of it. You don't have to give me the physical credit card. And as a good example, I added my nephew on an authorized user account, one of my credit cards, and it's going to boost his credit score. Now, he already has a good credit score. He sits between a 725 and a 745, but I'm doing this just to show him exactly how his credit profile is going to react. He's most likely going to be in the 800s because his credit card has over 8 years of payment history. Positive payment history makes up 35% of your credit score. It's going to instantaneously inject all of that payment history and the credit limit onto his credit profile, having the most positive impact possible. But he said something really interesting to me because he's sitting in the room while I'm shooting this. He said, so you mean to tell me if I only use my credit card for $20 and I pay it off in full, that's gonna continue to raise my credit score every single month? Yeah, literally. That's all you have to do if that's what you want to do, because you don't have to use credit cards and spend all this money to maintain a good credit score. And he's like, why doesn't everybody do that? Because some people just don't get it and they think that they have to spend money to have a really good credit score. No, you can spend the least amount of money on a credit card and still have high super impact and continue to raise your credit score. Why has nobody ever told you that, you ask? Because nobody wants to talk about the basics. When I got into credit cards and I didn't really understand it, I started to do the research, and that's exactly what I did. When I was at work, I would use my credit card to buy a soda or a snack, and that's it, and then pay it off. I was literally spending less than $5 a month building up my credit score, but I knew exactly how to get to the high limit credit cards. Eventually, it took me a while, but understanding this helped build my credit score tremendously, and I wasn't spending crazy money. If you don't feel comfortable using credit cards to their maximum capacity, you don't have to, because if you bank with the right credit card companies, they're going to increase your credit limits over time just for being responsible. It's just that simple. But not all credit card companies are created equal. Just remember that also. Some are more stingy than others, and others are way more giving. And also be aware, if you bank with the right credit union and you build the relationship up, it'll get you to a high limit credit card. You don't have to start off with a secure credit card. It's not necessary. If you build a relationship with an actual larger credit union and then do all of the data points that I teach in all my other videos, then in 6 to 8 months you apply for a high limit credit card and you'll get a high limit credit card. But if you go after the small limit credit cards in the beginning, well, that's what hurts you. But if you get a high limit credit card, you literally could spend $1 a month or $5 a month, and that credit union's gonna be like, wow, they really don't need this money. They're not gonna use it. They will actually continue to increase your credit limits, because guess what? You're using the card and then you're paying it off. You're showing them. Or you could just use it to make a actual payment for your cell phone, pay your car insurance. You could pick one specific thing to pay every single month, pay it off in full, and you're done, and you'll continue to actually grow your credit score every single month. I hope you enjoyed this video today. We covered a major topic on how to increase your credit score with the most impactful and most powerful tips that you can ever use to maintain a high credit score. Now, please make sure that you watch the next next video because it is about how to upgrade your Capital One credit card. And if you felt that I brought you some value in this video, make sure that you don't forget and subscribe to increase your credit score.